Bitcoin, dollar. Utilizing the USD on Polynex, debatably Bitfinex also may be more significant as a chart, but you've got a lot of draws. I trade a bit on this account. I do have a Bitfinex as well, but you have to settle on one, and this is the one we're on. They're quite similar. Of course, volume is important, so do check the Bitfinex and any other high volume exchanges. So where have we been? We've got to understand that we've been in a lockstep down leg, flat bottom, lockstep down leg, flat bottom, down leg. Now, longer run, all the people I've seen a number of forums, people are saying, oh, that's it for cryptos. Maybe it's an 80-90%. We had a 3-year before, and now we're going to have another 3-year winter. So now that when you start to get max depression, it's probably a sign that you're not too far off the end. In other words, it's no longer good time days and everybody is shriveling up and dying, and you're at max depression. I've seen a number of fixed Facebook groups that are locked and some that are open, and everybody is starting to think the unthinkable, and it's all just been a fad and we've all been fooled, and largely it's all over and it'll never be again, and or that it'll be 3 years like it was in GDAX era before it recovers, and that's usually the sign that people are wilting, they're relenting. Those that have to have sold, that are on over leveraged or uncertain, have already got out. So the scared money is out, and that means there's a lot of buyers now sitting on the sidelines, and any uncommitted folk to the crypto space have been shaken out with a good old shake. The down legs get progressively less aggressive. So here's down leg 1, which was initial. There was that first inverted HVF continuation, was exceedingly strong. This was actually your biggest damage. This is geometric chart, but if you set it to log scale, it squeezes it a lot up, and it makes the current view look more significant than the original view. But going back to geometric, let's be clear, that was probably the single biggest in percentage terms damage that you took, the first sell. You went from 19 to just above 11. That's $8,000. Yes, this wasn't pleasant, but it was two-step. It was down from roughly the 16s or 17s. There you can see just 17s down to 12. You didn't make a new low at that point, so that wasn't the full leg. This was all part of the staircase structure. So the way you want to think about it is more like this. Big sell-off. I'm going to make this super fat so everyone can see it. Big sell-off. Let's make it a color we haven't used. And then sideways line again. Flat bottom. And then sell off. And then flat bottom, which is why we've continued to bias for downside continuation. And then sell off. Note the sell-offs are actually getting less. The sell-offs in their scale are becoming less significant. That sell-off actually only really brings from the line. I'm taking it from that high there. But in fact, the sell-off is here. And in the same way, the sell-off is confirmed here over there. So you're now getting into what is typically called by a traditional technical analyst, and we do as well. We draw it slightly differently, but what I'd call a microfractal, or a smaller pattern that it reflects a rising wedge. In other words, those that think it's over, it isn't. We need to kill everyone off one more time so that everybody surrenders. And one more new low, and you'll have all the negativity and all the giving up that a market needs to then be able to move forward again. Not that it's going to go straight into mooning mode. There's a sustained period of bottoming and boredom that comes. You've got to go low volatility first before you can start going up. But that's going to be broadly in the structure of what I anticipate would be like a rising wedge. On a guesstimation, we don't know for sure, a squeeze like that. What does that beget? Well, it could even melt up and go back to these 10,000 levels. So this is blue line is the key levels of 10,000. Note how we got a micro fractal, and even this leg required a wind up to break the 10,000 level. There's the little fractal, also inverted HVF. This methodology is all you need with your key levels of significance. That's, people want to prattle on about other techniques and Elliott wave and all of that. Elliotticians aren't always clear for me where their buys and their sells are, although I do give credit to it as a valid study on technical analysis, and I'm not someone who pokes that, and I'm very critical of traditional technical analysis generally, like indicators and many other things. This is an indicator, but it has volume data in it, so I don't consider it in the normal category of indicators, because volume can proceed. But essentially with a rising wedge there, you probably get a further down move. So we've got geometry, I almost said geography there, more south side geography, geometry I mean, in this flat bottom inverted HVF that'll take us down, suggested 7,000 on this wind up. So you go up, you might kiss the 10,000 level and pop out the top of the wedge before breaking down. That's what I teach folk on the program. Wedges perform differently. They're not reliable directionally, but they do have a squeeze, so there will be an impulse of movement that will come with them at some point. So you get a bit of drift buying of people think that's it, out of hope. Coming up too steep under the bottom, but across the top there's still distribution going on. So you get those two angled up lines at a slight difference. You can get a little melt up through the 10,000 and then you can revisit down, or that can happen sooner and not get that high. Or we could go all the way up to the funnel and have a longer period. The other option that is also a possibility, this is my probability scenario that this target is made, and of course by definition that slightly disproportionate. We treat this as disproportion. That was a big impulse. This was a confusing and an intentionally misleading bit of price behavior, because you made a higher high here. This got everyone back into the bull train and then hurt them bad and brought them all the way back down to this flat line that I could even have drawn at that angle, clipping all the lows slightly better. That caught everybody bad. And then you had a very weak impulse and then back low again and then a very weak impulse. And a few of our guys on the board were all spotting this and were getting out and getting short and getting their tether positions in, or their fiat positions. I'm not a fan per se of tether. It depends on your exchange. If you only have tether as an option, that's what you have to use. Better to be in actual fiat if you are bearish the entire crypto market cap. Remember, when this all started, we were close, everyone, and I did a YouTube clip on this as well, so hand in there, next major level was 1 trillion when we were in the 800s, and that's probably why it balked. It also balked because you had the $20,000 mark coming up, so it had to have a rest, and it had gone very parabolic for a sustained period. So these are all retrospectively, we can know that we knew it was a big psychological level, and it didn't even run it. Usually you just put a tiptoe over it. That is your 10k, which is a big psychological level, and that's why you wound up here for breaking it, broke down to it, still paused at the level and played footsie with it before going level. So now you've had the relent, and people have given up double digits, and you're now in 9s and 8s, etc., and you traded as low as 7,000s. By the way, it's a lot of what I said on various Bitcoin clips that seem to have provoked a lot of people. I used to watch and respect your videos, but you're just a FUD spreader. It's not working, etc., and all of that. So you upset a lot of people. 7k, 8k is more realistic. Well, we've traded the 7s already, and you upset a bunch of people if you say something as you see it on the markets. But people unfortunately will emotionally react to things they don't want to hear. And rather than it being about the news or the probability assessment that you're trying to achieve, it's about their emotional ability to cope with something that causes them stress. So I don't tend to take these things too personally, but the reason why I mention them is that there's a lesson and a personal development program in everyone trying to become a better trader. And it's one of the first things I tell people on my program. You got to grow, and you got to grow emotionally. And people don't like to hear that. We all think we're mature adults, and in one sense we are, and in other senses we have a fragility in emotional sense to things we don't want to hear, especially towards the messenger bringer. Anyway, the probability I'm discussing is that being run and that being run. You may see that there's a further purple line. So these are used for targets, and this was the head and shoulders projection. That's quite a non-standard head and shoulders. So while I would say there's a reasonable and still I would say on balance a probability assessment of this and this occurring, this is a little further still, and at some point we may bottom. These are confluencing not too a million miles apart, especially if you're selling off in another exhaustive sell where you tend to get big hammers and wicks. So you could run that target and wick through that target. By the time you're talking about a 6 number occurring, one of the reasons why I said I think we'll trade a 6 is that I've got both that as a target. It's unlikely you're going to stop at 70.40. There'll be a lot of emotionality. You'll probably have a toe through this into 699. So that's why on a number of YouTubes I've said a dollar value starting with 6, and also this actually is a 6,000 the target. If you did make this, which is a little further and has a lesser odds, because it's possible for us to bottom in here because we're asking more on the bear side, you could even have a 5 because there's $73 on it. What likelihood of probability? Well, the geometry is 19.9 down to 13,000. It's essentially the simple mathematics that you've got right there in your key round level neckline that's been run. Is this a traditional right shoulder and that a traditional left shoulder? Well, it was a very ascending HVF. It does seem to have been a key level for a while. This whole flat bottom was trying to hang on, just being run the 13 level, holding the 13. Then the next one is about holding the 10. So you've gone in a 3K increment from here. So you had 10 and you've had a 3K increment. Well, 7 is the next one on that. Maybe if we're slowing, it's 8 because you've just run the 8 and you're getting a reaction. Everyone says, that's it, it's back to bull, or some people will be so hurt they don't know what to say, but you've got an 8K test there that was run. These lines are made a little bit dark and thick, so you won't spot that, but that, as I've already shown you, ran a 7 number. So where do we stand? On balance of probabilities, I think there is still a strong possibility and even the probability that those will be met. In other words, the bad news is not yet over, but you could have a little bit of FUD, a little bit of, who knows, something about an exchange or regulation, and you get a final stab down and capitulate. My medium term and longer view is actually that we're in the beginning of an end of this entire cycle. But people who come in too soon will be caught out. In other words, there's always a final twist in the tail. So if I change this color, and let's go really cranky colors and give you the pink, you've probably got some level, and I'm making a nice ugly draw of this, but you've probably got some degree of falling wedge structure setting up here, and we can spill out the bottom before we break out the top. There's kind of a 2-layer to this falling wedge because this top has squeezed within the wedge, and it's one of the reasons why I split wedges like that. So you've had a squeeze within a squeeze. We started getting resisted a lot sooner. This actually, rather than being negative, is probably illustrating that the volatility of the bearishness is slowly getting out. In other words, the recovery move didn't go all the way up to here, still swinging violently up and violently back down. The amplitudes are reducing, which is another reason why I say that the end of the pain will come. The end of the pain will come, and it's not forever. And all those that have given up on crypto and said, that's it, and I'm done, and we got caught out, and now it's all over, etc. As I say, it's a perfect indicator on sentiment that the final the final weak hands are capitulating. So don't be the weak hand that capitulates if you can help it. Recognize where you are. You need to be defensive a while longer. And we are grinding along the lower end of this wedge. And that's often where you have a final capitulation down, which could make even the 6,000. That'll have the negativity and the bleating and the bedwetting that will go on at those levels will be epic, especially having been at 19 and essentially you're at about a third, less than a third. That will be pretty epic, and it'll be a perfect signal for people to start nibbling and going long. In fact, even in all these steps, you have left shoulder structure waiting for the head for future inverted head and shoulders reversals. So this is the amazing thing about pattern study. So I'm going to remove some of this mess because I've really made a tart's handbag out of this piece of chart work. But you'll probably see it something similar again at some point. Now, the other interesting aspect is 360 degrees analysis, which we always encourage folks to do. And that just means looking at, for example, the pound's been really strong against the dollar, and that's another huge value as to why our room that has an FX equities webinar on Sunday and commodities that keeps an eye at all things anti-dollar and dollar itself is so useful, is that we were following the non-farm, and of course this pump all happened on the non-farm. So we actually understand real world, inverted commas real, and virtual, inverted commas virtual, the flow of liquidity, because money flows from different asset classes all the time. So in the longer run, this would be a falling wedge that's probably going to have a pop with a slightly smaller wedge within it that is leaning on the lower end. But I think there's scope for that final capitulation out the grind line, which you'll learn about on a program if you elect to do one, along the bottoms before pumping up to the upside. You can see what's the compliance like. I'm not mad for the structure of this pattern. It wasn't brilliant. So this secondary surge impulse that gave a higher high here ended up creating the geometry for that low. And then you got a much smaller disproportionate second and third impulse here. So it wasn't the tidiest one, but these often perform. They can be just ugly mules at work, and they do. And that gave us that primary target. Did we stop there and that's it in the bottom just because of non-farm day and a little bit of dollar news? I suspect not. And the key thing is, whilst we can be always inaccurate, that means incorrect for most of you, the probability play is the wise play. And the probability play says it ain't over yet, but we might be getting to the point where it may soon start to begin a bottoming eventuality. So once again, dip through there. Outside chance also of the non-standard head and shoulders with a 13,000 neckline. And that, as I say, take you to 6,000. I'm going to show you Bitcoin versus GBP. So part of what we also do for in fact, that's GBP against the dollar. And you can see how strong the pound has been. And there's been setups all the way along here for people trading that. And in fact, when your cryptos are going quiet, you can take up defensive positions and trade in FX and equities all within our platform, and we've got a brand new platform coming for beginning of April, end of March, which is exciting us a great deal in terms of being able to follow and its functionality, etc. But that's not the point of this discussion. I was actually looking for Bitcoin versus GBP. There's my charts, too many open, and this is something to just give you a little bit of an insight as well. Once again, you see the same similar structure. The marginally higher high here was slightly distorted, but you still had the small fractal of the HVF there, and the target down from there is also giving a very tight confluence on the pound, a very tight. You've had slightly stronger reaction. I've also got, I'm not sure it's the same time frame as the dollar one. What was I on? I was on 4 hours, so let's make it like for like so that we don't create disproportionality in your mind, as I'm not showing the same scale. So what we have here is Bitcoin against the pound. So it's a different currency. Let's just expand it and get the same approximate view so that we don't have things looking bigger than they actually are. In your mental mind, the mind takes pictures. You've got to always check that you're comparing like for like. Know that whether you're on log scale or whether you're on geometric scale, and try always compare like for like, particularly when you're doing something for Bitcoin. Look at that gapping. This is Coinbase, so you're going to get gapping. This is panic selling. Look at that wick. You've got to question what happened there. That data is questionable. Quite possibly could have been trade there, but that would have just been, some fool dropping a sizable amount and just smacking the stack. Nonetheless, he may have, depending on where he got filled, he may have served himself. But right down there was a terrible execution because he had opportunity to get out a little later up top here. Flat bottom, step down, flat bottom, step down, flat bottom, step down, microfractal. This was occurring on the $10,000, so it was occurring just sub the 7.2, which is basically your GBP USD exchange rate. So the dollar is the god market in there. Note how it perfectly ran our interim here and then rallied up and then did a wind up to smash through the interim. And it stopped and it's done this rising wedge back up to here as well. So once again, the scenario cast for this is run the confluence of lows. That'll actually see you get a 4. That's right, a 4 on pound It'll be high fours for the Bitcoin against the pound. And that, will shock a lot of people. And as I say, this will be the point of highest bedwetting. And who knows? You can see they're selling into this. It can push a little higher. It can go all the way. It could actually rally all the way up to the funnel, for that matter, and then hold at that point. And everyone will think, yeah, we're back on the gravy train. They will always be too early, the bottom callers. They will always be too early, the bottom callers. There will always be one more, usually, on balance of probabilities. Could we be wrong? Yes, that could be the low. The minute this funnel is run, I'll start to consider that we've had the low in, but it'll become higher on my probability assessment and maybe slightly towards the majority side. Until then, while we're in this zone, the anticipation is a break, and that could be a 4.8. Now, we've been calling for these big sell-off levels for a long, long time. When this first broke up top here at 10,000, people thought I'm mad when we said we could get a 4 at 10. Something is trading in a 4 when you're trading in and around here at 10,396 pounds, and that's just before it spilled at 6,500. It didn't look so crazy there, but still sounded a long way off. Even at 6,648 sounds a long way off. But it's the season of fear, and there's a final capitulation generally in my experience of price behavior, but it doesn't have to be. And the invalidation of these areas running through that red high would probably mean that there's the chance for that final spill has now passed on balance. So it would go to the majority view. That means it's 50% or more. At the moment, it's more likely that we have the other down leg. That's the take on Bitcoin. Bitcoin against the pound, Bitcoin against the dollar. Go learn how to do 360-degree analysis. Go do it for yourself. Or better still, be part of an awesome community where doing proper Bitcoin analysis is just the beginning of what we do. And then we drill down into our favorite coins. We have an amazing trade that we believe will be setting up in the first quarter. And it will rely on a certain element of the overall coin market cap to have bottomed. And I can, in terms of my assessment on balance of probabilities, that also will be occurring. So there's a good medium to long time frame news coming out here from my side on the chart, although the pain isn't over yet, and there's some final clinger honors that need to be shaken out so that all the buyers are on the sideline that are weak hands. And the share register, as I like to sometimes say, of course there's no such thing on cryptos, the share register has changed hands, and the bold are now holding, and the others have folded. So watch the structure. It's not bottoming. You should get a series of marginally lower lows, not continuation patterns like rising wedges. That is the key element. Then buyers after we've done this kind of a run. And we're getting the same whether we're looking at the dollar or the pound. Feel free to knock yourself out and have a look at the euro and do all the others. I'm giving you one free view on my assessment on Bitcoin. I'm doing this regularly and updating it for all my premium guys, and we drop it down through all the other coins in terms of how we weight ourselves. And we have a super trade waiting for us. In fact, we probably have more than one, but the real super trade is going to be a trade, in my opinion, that will be the biggest of all that we have taken. And I intend to make sure that as long as those are in my community, they don't miss that opportunity, and the multiple will be substantial, although the overperformance that we expect on it will be difficult to quantify. And we have a methodology and a method for that, and I look forward to taking them through that and getting everyone strong and deep in the money on their original investment with me. If you want to find out more about how we do what we do the usual. Go to Market Sniper, click Get Started. Tell us where you're at. It's just 5 tick box questions. Do not consider this if you do not have resources. Benefit from the small amount I put out for review. Learn and develop as best you can. And I wish you well regardless. If you are in the category that is aligned to a probability-based assessment, not a 100% assessment, you're less inclined to make emotional outbursts on YouTube and you understand what probability means and a method means, then you might be our kind of guy. And we'd love to have you. And that's it from me. Have an awesome weekend. That's your Bitcoin Roundup. Hope it's useful, and keep the comments positive and try seize on your own emotional responses to somebody else giving you news, and It's part of your personal development. You will become a better trader if you are emotionally more controlled as an individual. I can't emphasize that enough. I don't know how many people actually recognize that, but I have to say, go into your higher brain. Avoid the amygdala response. It's nearly always, you always say thank you for it afterwards when you reassess.